There are many algorithms, computer graphics is one, that you can operate completely in parallel.
Nvidia has such a distinct advantage out of the gate early. You've heard Jensen's been on basically the stage of every major OEM, every major software provider over the last year.
Trailing 12-month basis, Nvidia has more than tripled its revenue, and it has more than doubled its operating margin.
Nvidia's value has tripled in just 1 year. Is a $5 trillion market cap next? This explosive growth has everyone asking, is this just a temporary spike? Or can Nvidia keep soaring as more money floods into AI? Doug Clinton from Deepwater Asset Management joins us, convinced we're only at the start of an AI revolution in the market. Are we on the edge of a massive financial shakeup? Join us as we dive deep into these shocking forecasts to see what lies ahead for Nvidia. The ascending giant, Nvidia's unstoppable rise in the AI era. Continuing our discussion on Nvidia, we've seen a huge increase in the company's value, tripling in just a year. The big question now is whether this rapid growth is just a short-term thing, or if it can keep going as more investors put money into the AI sector. Joining us today is Doug Clinton, managing partner at Deepwater Asset Management, who strongly believes in the potential for continued growth. Doug thinks that even though it might seem natural to wonder when this rise will stop, we're actually still in the early stages, maybe the third or fourth inning, of a market driven by AI. Even though the steep growth curve on charts might look scary, Doug suggests that this unease is something investors might need to get used to. He imagines a future where this growth turns into a full-blown AI bubble.
Now to what will inevitably become a bubble. I think it will take a few years.
And at that point, discussions about valuations might become less important. Nvidia's path in the tech world is truly amazing. Just a few years ago, their data center business was worth $15 billion, and last year it shot up to $48 billion. Now, experts believe it could go over $100 billion this year. Such a huge jump in revenue is rare in history.
Adjusted gross margins for the fourth quarter came in at 66%, which is stronger than what the street was anticipating. One of the numbers that I was just looking for right now came in for data center revenue. So remember, we talked about that earlier today. Will data center revenue offset weakness in gaming as well as mining? So data center revenue came in at $3.83 billion. The street was expecting $3.72 billion. So that's definitely some strength over there. Management quote thus far in just the note we're seeing from the CEO of Nvidia saying that they are going through and correcting inventory levels and paving the way for new products, much like we've heard before in the past. And so, yeah, those are the initial numbers that I'm seeing just now at this moment.
Pop back on with us when you have a chance to look through a little bit further. Hear anything else, let us know. Josh Brown, I go to you again. All right, so data center revenue is pretty strong, good, reasonably good margins. Maybe not the, fall out of bed story that some were, I guess, worrying about.
We are now entering the fourth era of computing, led by the rise of generative AI. This new technology is set to change the way we think about computing and software. It's a big shift, and Nvidia has become the top player in this new era. Even if investment in data centers slows down a bit, Nvidia is expected to keep doing very well in the coming years. There's a lot of talk in the tech world about how long this growth can last, especially in AI. But the outlook is still positive. The total value of data centers worldwide has gone over $1 trillion. While not all will switch to advanced computing right away, many are likely to do so in the next few years. But that's not the whole story. Nvidia is in a great position to benefit from this changing market. Its smart strategies and innovation give it a big edge, allowing it to grab a large part of the market growth. This isn't just about numbers, it's about leading the way in tech evolution, showing a bright future for Nvidia in the world of AI-driven computing. But that's not all. Nvidia's journey to such a high market cap isn't just about buying other companies. It's also about how well it adapts and grows in the fast-changing tech industry. By staying ahead of trends and innovating constantly, Nvidia is setting itself up for even greater success. Let's see how big tech shapes our future. Ascending the AI apex.
Apple took 1,793 days, or less than 5 years, to go from a $1 trillion company to a $3 trillion company. Nvidia says hold my beer. They did the same thing, 1 to 3 trillion, in less than a year.
When ChatGPT came out, Nvidia was worth less than $1 trillion. Then 6 months, 7 months after ChatGPT, in May of 2023, it hit $1 trillion. And at the time, people were starting to realize that if AI was a gold rush, Nvidia was the one making the shovels. The Nvidia craze just never stopped. It hit $2 trillion in February of this year.
It's been an absolute incredible run, but it has been absolutely backstopped by the fundamentals.
6-8 months later, its value has already doubled. And then from $2 trillion, it only took just over 3 months for it to hit $3 trillion.
Nvidia and big names like Apple and Microsoft are all set to take advantage of the growing AI industry. These companies have put a lot of money into AI technology and infrastructure. This not only gives them a strong base, but also allows them to bring in smaller companies with new and creative technologies. Unlike some market experts who think AI is currently overrated, Neela Richardson believes this view is incorrect. She says we are just seeing the beginning of AI's development. Backing up Neela's positive outlook, predictions suggest the global AI market could grow by 37% each year, from 2023 to 2030. This forecast from Markets and Markets shows a big chance for growth in this area. Given Nvidia's top spot in the AI market, investing in Nvidia could be a simple way to benefit from this expected growth. But here's the big question many investors are asking. Is it a good idea to start buying Nvidia stocks now? Let's explore this more to find out. When you look at the financials of Apple and Nvidia, there's a noticeable difference. Apple, even though it's a huge tech company, hasn't grown as much as Nvidia. For example, if we look at the most recent data, Apple's revenue dropped by 4% from last year, while Nvidia's revenue went up by an impressive 237%. Over the last 10 years, Nvidia's revenue increased by a massive 991%, while Apple's only went up by 56%. This difference in growth rates shows just how successful each company has been. Apple's net income is still big, making Nvidia's earnings look smaller in comparison. But it's important to look at how fast each company is growing. Nvidia has been growing quickly, far outpacing Apple no matter which time period we consider.
All of these chips that I'm showing you here are all in full development, 100% of them. And the rhythm is 1 year at the limits of technology, all 100% architecturally compatible. So this is basically what Nvidia is building. A robotic factory is designed with 3 computers. Train the AI on Nvidia AI. You have the robot running on the PLC systems for orchestrating the factories, and then you, of course, simulate everything inside Omniverse. Well, the robotic arm and the robotic AMRs are also the same way, 3 computer systems. The difference is the 2 Omniverses will come together. So they'll share one virtual space. When they share one virtual space, that robotic arm will become inside the robotic factory. And again, 3 computers, and we provide the computer, the acceleration layers, and pre-trained AI models.
The potential for Nvidia's future growth also looks promising. We're just about a year and a half into seeing Nvidia's rapid progress, which suggests it might keep growing. But this isn't the whole story. In media and public discussions, we often compare companies like Apple and Nvidia for entertainment, even if these comparisons don't always make sense. We like to tell stories that engage viewers, even if the facts are more complicated. So, while it might be easy to look at the numbers and say one company is better than the other, the reality is more complex. Nvidia's fast growth and Apple's steady performance tell the story of 2 tech giants on very different paths, each impressive in its own way. But this isn't the most surprising part. What's truly interesting is how these companies are navigating their unique journeys in the tech world. While Nvidia is rapidly climbing, Apple's steady hand continues to shape the tech landscape. Both paths show us different ways to achieve success in this fast-paced industry. Stocks are still a good choice, especially because the company is focused on innovation and plans to release a new AI chip every year. Nvidia's CEO, Jensen Huang, leads this effort. He recently introduced Nvidia's latest AI chip architecture called Rubin, just after unveiling the Blackwell model.
Nvidia announced its new line of AI processors. The CEO, Jensen Huang, announcing the new architecture. It's dubbed Rubin, and that comes ahead of the Computex Tech Conference that's being held in Taipei.
But our next generation platform is called Rubin. So we have the Rubin platform, and 1 year later, we'd have the Rubin Ultra platform.
The Blackwell model is set to come out in late 2024. Huang also hinted at a Blackwell Ultra chip for 2025 and a next-generation Hopper platform for 2026. Next, explore Nvidia's latest tech leaps. Navigating the AI surge, big tech's billion-dollar bets.
Why don't we take a look at what it really looks like? Play, please. This is 150 miles of cables, fiber optic cables, 2,000 fans, 70,000 cubic feet per minute. It probably recycles the air in this entire room in a couple of minutes. 40,000 pounds. 4 elephants. 1 GPU.
While he didn't share many details, Huang mentioned that the Hopper platform would have a new type of high-speed memory and an ultra-fast switch, promising huge performance improvements. He said we are on the edge of a major change in computing. With Nvidia's cutting-edge work in AI and fast computing, the company is always pushing the boundaries of what technology can do and leading the next wave of tech advancements. This forward-looking strategy is key because it keeps Nvidia ahead of its competitors in the rapidly growing market for AI GPUs. But that's not all. Nvidia's software is also highly praised, with its chips becoming the industry standard, mainly because of its Cuda technology. This focus on both top-notch hardware and software shows Nvidia's strong commitment to staying a leader in the tech world, making it an appealing investment. Nvidia introduced Cuda, a free software platform that changed how programmers interact with its graphics processing units. This made it easier for developers to write programs specifically for Nvidia's GPUs, making the process more straightforward and efficient. As a result, many programmers became skilled in using Cuda, making it a standard tool in GPU programming. This smart move by Nvidia paid off big time. Most GPU programmers now know the Cuda platform well, which helps them get the best performance out of Nvidia's GPUs. Teaching these programmers a new platform would be costly and time-consuming. Switching between different software platforms could also slow down development and make things less efficient. But this wasn't the only benefit. By combining its hardware with the Cuda software, Nvidia gained a lot of control over the whole technology stack. This means everything from the physical GPUs to the software and firmware updates that keep them running well. This control helps Nvidia stay ahead in GPU technology and keep influencing how programmers develop GPU-accelerated applications. This integration has been a game changer for Nvidia, keeping it at the forefront of the tech industry. It ensures their GPUs run smoothly and remain the top choice for developers around the world. As the company makes progress with new technologies, it makes sure that these new technologies work well with older ones. This method of keeping different generations of technology compatible has been very useful. By allowing new and old tech to work together smoothly, the company has captured a big part of the market. This plan has worked so well that the company now controls about 80% of the GPU market. But this isn't the whole story. This big success shows how important their method is, not just for pushing new ideas, but also for valuing and including older technologies. As we go further into the video, it's important to recognize the hard work and time spent making such informative content. If you find this video helpful, liking it and subscribing to the channel is a great way to show your support. This support helps the channel grow and keep providing quality content. With your support, learning about the changing world of technology becomes even more exciting and informative. Let's connect tech innovations with real market trends, navigating the valuation maze.
I like to use either EV/EBIT or just a classic PE for filtering out companies based on their price. I do not want to pay too much compared to what I'm getting in earnings. We're going to use a metric that Ticker calls trailing TEV divided by EBIT. TEV, or total enterprise value, is the market cap of the company plus all its liabilities minus cash and equivalents. I think I prefer EV/EBIT slightly over PE because it punishes companies with weak balance sheets, and it benefits those with strong ones. Let's put this number at 15 for now. This is quite a strict criterion, but I'll show you how you can be a little bit more flexible at the end of this video. Price, price, price. By excluding costly companies, you will indeed miss a few opportunities. Still, it is also true that you will avoid many more mistakes. Once the most expensive companies have been filtered out, we're left with about 20% of the whole universe of stocks. We are one step closer of finding great opportunities in the market. But there's more to be done.
When we think about figuring out how much a company's shares are worth, we have several tools to help us. Usually, we might look at numbers like the price-to-earnings ratio or the price-to-book ratio to see if a stock's price is fair. But we need to ask if these usual methods still make sense when judging if a stock is overvalued, especially if the stock's price is likely to stay the same for a long time, like 5 years. This question matters a lot to investors who need to make careful and precise decisions. It's even more important in fast-changing areas like technology, where new inventions can quickly change a company's future. For example, back in July 2022, there was a stock priced around $150 that I thought was a great buy. This wasn't just because of its current price, but also because of exciting developments in artificial intelligence. But here's the tricky part. Investors should look beyond just the numbers and think about bigger trends in technology and how they might affect the market. This way of thinking can uncover chances that traditional methods might miss. For example, a company that's ahead in AI technology might seem undervalued by old standards if people haven't yet realized how its new products or services could change the game. In these cases, understanding how market trends, tech advancements, and financial metrics come together is key to finding truly valuable investments. Businesses that took the opportunity when the value went over 900, I decided to run an ad. The ad highlighted that while the company had made great progress, there were still some risks involved. This doesn't mean the company isn't strong, but it depends heavily on just 5 clients, which is risky. The demand for Cuda increased quickly, meaning a lot of buying happened sooner than expected. Now, every major cloud provider in the world is trying to make their own chips, moving into a space that wasn't so crowded before. Also, big companies like Intel and AMD are joining in, increasing the competition.
If you're an AI company and not using Nvidia solutions, are you even an AI company? Nvidia's sales have exploded. In its most recent earnings report, Nvidia reported $22 billion in data center sales alone, a staggering 400% increase from the previous year, primarily driven by AI. To put into perspective, AMD reported $2.3 billion and Intel $3 billion in sales, and both of them mainly from CPUs, which are not ideal for heavy AI workloads. We can now see why these tech giants want to compete with Nvidia in the AI chip market. The money is flowing, and to be fair, both of the companies do already compete, even if their sales say otherwise. AMD recently announced the MI300X, claiming it as a great performance alternative to Nvidia's H100, while Intel offers the Gaudi 2 as a cost-effective option. Both companies shared new solutions and roadmap at Computex X, and today we're focusing only on their AI accelerator.
But that's not the worst part. Amid all these changes, one big question remains. how long can the company keep its profit margins high? With the fierce competition and changing market, the company's financial health could be at risk. If you're a careful investor interested in artificial intelligence, Nvidia might be your best choice for a safe investment. AI has been an exciting topic for a long time, but it really caught everyone's attention when OpenAI released ChatGPT in November 2022. Not long after, Microsoft showed its strong belief in AI by investing more in OpenAI. This was a clear sign that AI was becoming more than just a popular term. It was becoming important across many industries. But this wasn't the most surprising part. The growing interest in AI technologies isn't just because they're cool. It's because they have real-world uses that are changing how companies work and how we live our lives. From automating everyday tasks to creating new ways to use technology, AI is at the heart of a big change. This makes companies like Nvidia, which are leaders in developing AI technologies, very appealing to investors looking for stability in a fast-changing market. Let's dive into Nvidia's influence on the AI revolution, behind the Silicon Curtain. But the excitement doesn't stop there. Investing in Nvidia
to a very, very big GPU. Ladies and gentlemen, enjoy this.
Offers a way to join the AI movement without taking on too much risk. The company's strong reputation and key role in the AI tech industry give a sense of security that is attractive to those who prefer a more careful investment approach. As AI keeps growing and expanding into new areas, having a stake in a leading company like Nvidia could be a smart move for those looking to benefit from the next wave of technological innovations. This ongoing development is great news for a company like Nvidia. Nvidia provides the crucial technology that helps other companies build and improve their AI capabilities. This support is vital as businesses try to integrate AI into their workflows and products. Nvidia's role is becoming more important as more industries look to use AI to innovate and become more efficient. The company's knowledge and technology make it a key player in the tech industry. Nvidia is in a good position to grow and lead in the AI technology field. But the challenge doesn't stop here. As more companies dive into AI, the demand for Nvidia's technology continues to rise. This increasing need for AI solutions places Nvidia in a strong position for future growth. It's clear that the company has a bright future in the AI sector. The company is currently facing a big challenge in keeping up with the high demand for its products. According to the management, there's a huge need for Nvidia's latest H200 chip and the newly released Blackwell architecture. They're selling faster than they can be made. This shortage is expected to continue until at least 2025. Right now, the biggest thing stopping Nvidia from selling even more GPUs is simply not having enough of them. Their manufacturing partners, including TSMC and Samsung, are under pressure to increase their production quickly to catch up with this high demand. But this isn't the worst part. Even though Nvidia's stock prices have risen sharply, the ongoing struggle to meet product demand could affect the company's financial performance in the future. If Nvidia can't supply enough chips to meet the demand, it could slow down their growth and affect their profits. This situation shows how crucial it is for production to align closely with market demands to maintain a company's growth and financial health. What do you think? Are Nvidia shares a sound investment at these prices, or is the risk too great?
I think, and you look at that from the expected growth, maybe even a PEG ratio, 1.4, which when you compare that with other companies within the tech space, it's once again, I'm going to use that word astounding in terms of their relative valuation to the growth. Now, the key is, and I think this is what you and Kevin were talking about, does that growth continue? Well, expectations for Q2 are still really high. So that growth is kind of built into the guidance for Q2. But, at some point, when does this thing start to consolidate a little bit with the overall market? Because even though it's been a standalone and up 40% over the course of this month, what catapulted it to those levels when it was very favorable earnings and guidance, and what are we going to have to wait for another 3 months will be, potentially favorable earnings and guidance. So, what is going to be that catalyst to push it to all-time highs? We'll have to see, because at some point, this stock represents